Number 1. Research. Through analysis of financial statement, market trends and industry dynamics. Defining clear investment goal. You must have a clear investment goals and regularity reviewing progress to make adjustment. Portfolio diversification. Spreading investment across asset classes, industries and region and reduce risk. Hello my dear students, I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Grade College, a Temple of Excellence, MYSURU. In this session, I am going to hand Security Analysis and Portfolio Management, 6th semester, Unit 1, Session 1 of BBA. Today, the first chapter, Introduction to Investment, I am going to tell now. This is a theory question definitely asked from the examination point of view. So the first unit is the investment, introduction to investment. What are the qualities of successful investing? This is a question they are going to ask. They will ask the question like this. What are the qualities for successful investing? Number 1, research. Through analysis of financial statement, market trends and industry dynamics. This is important. They have to make the research through analysis of financial statement, market trend and industry dynamics. Second one, risk management, diversifying portfolios to spread risk across assets and sector. You have to bifurcate your entire money, or risk management means you have to put the money. Say for example, as a retired official, generally they will say, once a retired, whatever the lump sum comes, they will put in the FD because it is safe and easy, no risk is there. But if you take the risk and put in the share, no, there will be risk. But the returns are more. Where if you put the money in the FD, the returns are less, but guarantee. But here the risks are more, we'll get the more interest. Diversifying portfolio to spread risk across assets and sectors. Patience. Adopting a long-term perspective. You have to wait for a long time to get the award. Avoiding panic during short-term fluctuation. If you put only for 1 or 2 years, there is definitely a panic for you, whether we'll get the more amount or not. But a long term, definitely it will fetch a long amount. That's we say that heavy amount we can have in the long term, maybe 10 years, 15 years, we eat for a time. Definitely we get the what's called about a favorable reply will become. Discipline, sticking to the investment strategy and avoiding impulsive decision driven by fear or greed. Knowledge, continuous self-education about financial market strategies and economic trend. See that you must have knowledge, continuous self-education about financial market strategies and economic trends. Then sixth one, adaptability, flexibility to adjust the investment approach with changing market condition and new information. Emotional control, keeping emotion in check to prevent fear or overconfidence from dictating the decisions. I will repeat. Emotional control, keeping emotions in check to prevent fear or overconfidence from dictating decisions. Goal setting, you have to put such a goal, whether to arrive it or not. Defining clear investment goals and regularly reviewing progress to make adjustment. Defining clear investment goal. You must have a clear investment goals and regularity reviewing progress to make adjustment. Ninth one, consistency, regularly contributing to investment account to benefit from compounding return. If you are what's called whatever the investment you do regularly will get the compound interest. Focus on fundamental, prioritizing the intrinsic value of investment over the short-term price movement. Focus on fundamentals, prioritizing the intrinsic value, the value per share, total asset minus total liability is called total capital employed minus preference share is called the net asset or capital employed for equity shareholder divided by number of equity share, that is the intrinsic value. It is called capital employed. Total asset, either the book value. If they have got a market value, then you have to take the market value. Unless book value means whatever the value available in the balance sheet is called the book value. Whatever available in the adjustment is called market value. If the market value is given, then you take the market value. Unless you have to take the book value minus liability. Which are the liabilities are? Creditor, provision for taxation, proposed dividend, outstanding expenses, workman savings bank account. So if we deduct all these now, total capital employed will come minus preference share capital, capital employed for equity shareholder, which is called net asset divided by number of equity shares. 11th one, long-term perspective, emphasizing long-term wealth, accumulation and understanding compound growth, because you have to, long term is most important. You have to give a chance to go for 5 years, 6 years, 10 years, so that your fund will be accumulated, understanding the compounding growth. Portfolio diversification, spreading investment across asset classes, industries and regions and reduce risk. So you have to bifurcate your entire amount in the different source so that we can get the more, though it's a more risk, but we can have a good award. Monitoring and review, regularly checking portfolio performance and adjusting to stay aligned with goals. Cost consciousness, minimizing investment cost, fees, taxes to maximize long-term return. This is important. Cost consciousness, you have to cut down the cost, minimizing investment cost like fees and taxes so that we can maximize a long-term return. 15 continuous improvement, constantly refining investment skills and strategy through study, mentorship or advice. Continuous improvement, constantly refining investment skills and strategy through study and mentorship and or advice. These are all the points to be remembered. See that we have got 15 points. First is the research you have to make, then there is a risk management, then there is a patience, there is a discipline, knowledge, adaptability, emotional control, goal setting, consistency, focus on fundamentals, long-term perspective, portfolio diversification, monitoring and review, cost consciousness, continuous improvement. Hope you understand. Definite question from the examination point of view. I have given about 15 points. At least write this 15 point, which are the main heading, and explain a little bit about that 15 point. So definitely it fit a good marks from the examination point of view. Hope this question definitely from examination point of view. I have given 15 point. Each point is very, very simple. Write the what's called heading and write 2 or 3 words about that particular concept. Hope you understand. We'll meet in the next class with another what's called session with the capital market of the first unit. Till then, goodbye. Meet in the next session.